Hello and welcome. My name is Kieran McSharry and it's a pleasure to be touching base with you again today. I'm here with our CFO, Chief Financial Officer for First Capital Bank, Fanwell Kampanje, and we're here to give you a business update and also to unpack a little bit more the 2022 numbers.
Right, so good afternoon, viewers. It feels like it was only yesterday that we spoke with you, and I think it is important, that we always come back to you, and it's a good time to connect and share our performance for 2022 with you.
It's been a challenging year, but I'm pleased to say that the bank has sustained growth in that year. And growth is critical to us as a bank, but it's also critical to all of our stakeholders, from our regulator, to our shareholders, to our customers, our clients, our staff, and the communities in which we work. So let's unpack 2022 in a little bit more detail. It was a challenging year.
Very challenging.
And it was impacted by the global events that we saw in the Ukraine-Russian war, but also was impacted to some extent by the impact of COVID-19. And as we continue to emerge from the pandemic, the supply chain challenges that we've experienced, that was also a challenge that we had. But as we move forward, we as a business did continue to, as I said earlier, sustain growth in the year. Locally and internationally, there's an inflation challenge and an inflation crisis. And locally, we saw the monthly inflation rate peak at 30% and then decline towards the end of the year to 2.5%. We also saw continuing macro challenges such as a tightening of liquidity in the market as the Reserve Bank introduced various initiatives under the monetary policy statement. The continuing non-negotiable zero coupon certificates of deposit, the introduction of statutory reserves on US dollar deposits, and many other initiatives that saw challenges in the year. However, we continue to grow. We continue to lend to the productive sectors with our agricultural share of book going up to 21%. But we had a good broad spread across all of our sectors in the year. We also launched a number of new products. We broadened our product base in terms of a new group mobile app. We also launched an internet banking platform. We launched InfiniPay, a bulk payment tool. And we had many other products that either have been launched or are in the process of being launched. We additionally secured lines of credit from the European Investment Bank, which we're working on distributing. And we're working on other lines of credit in order to broaden our ability and capacity to lend. Giving back to the communities is also something that's incredibly important to us and one of our core values under our citizenship value. And I'm delighted to say we continue to work in a strategic partnership with the Zimbabwe Farmers Union, Junior Achievement Zimbabwe, and also the Junior Golf that we sponsored for the first time this year. So in summary, I guess, we onboarded more correspondent banks, broadened our scope there. We had a 48% growth in our customer base. Our lending to key sectors expanded and we diversified across many sectors. And most importantly, we maintained our core capital at above the 30 million minimum capital requirement at 46 million. So that's a kind of high-level summary. And maybe, Fanwell, you can unpack a little bit more the numbers.
So, Kieran, you talk about the environment having been quite difficult for 2022. Indeed, that was the fact. And in fact, in our local environment, with inflation running above 230% on an annualized basis, that presented, quite, a difficult sort of environment for us to grind in autumn. But that notwithstanding, I think the bank performed quite reasonably during the period. We were still able to, make, a profit in real terms. Here I speak to, the inflation-adjusted financial outcome, for the bank. We are down at a profit after tax level on 2021, some 27%, to a profit of about 8.4 billion for 2022. But I think one thing that is quite important, when you try to unpack, that outturn is the fact that when you strip out, the technical adjustments, related to the revaluation of properties and the investment portfolio, we're actually up, on 2021, 57%, from about 5.9 billion to 9.3 billion in 2022. And I think it speaks to some element of resilience in the performance of the bank. What we witnessed during the course of the year is that progressively our balance sheet, dollarized, during the period.
Yeah.
And at the end of the year, both the deposit base and the lending assets were actually above 70%, in foreign currency, compared to levels below 20% at the beginning of the year. And I think it's just a reflection of what's actually happened, on the local environment, so to speak. Of course, that same complexion is mirrored somewhat in the income statement, though on a lagging basis, and we see foreign currency income contributing about 37% of our total income for 2022, and that is actually quite a significant move from about 13% in 2021. Yeah. So just speaking, Kiran, to some of the key ratios that we track, as a business, we're finding that our cost-to-income ratio is coming in at 56.3, lower than 58% in 2021. It's reflecting a movement to what we desire as a business. But I must hasten to add here that whilst that is the case for 2022, we still have a lot of pressure, on performance because of the fast pace at which costs are actually accelerating. So we post positive jaws in 2022 at 5%. But when you strip out, those technical credits that I spoke about earlier, you actually find this ratio to be, in the negative zone, which places a challenge for us to ensure that as we go forward into 2023, we actually look to our cost base a little bit more, and we also try and accelerate the pace at which we grow our revenues. Now, the asset portfolio, I think, was quite clean. Non-performing assets were only at 0.8% of the total assets we have on book, which is an improvement from 1.2% in 2021. So, all considered, I think the performance is quite solid, given the context of the environment that we're operating in, and the cost acceleration that we are seeing taking place in the economy.
Okay, thank you. Thank you. I guess one way to sum it up is, as you say, 57% growth in inflation-adjusted operating profit.
Yes.
85% growth in inflation-adjusted lending. And I think it was about 65% inflation-adjusted growth in our deposits.
Yes.
A good set of results given the prevailing circumstances and challenges in the economy. And of course, our core capital comfortably above the minimum.
Above 30% minimum.
Yeah.
And of course, I mean, we're just going to continue having, the volatility in that number because of the manner in which it is assessed as, the exchange rate moves. But otherwise, I think in our case, we do have quite a significant margin of safety in that area.
And I guess if we were to look forward to just where we are now, and you talked about the challenges which continue to prevail as we get into Q1.
Yes.
And as you and I know, Q1 was a very challenging quarter.
Yes.
With the cost growth and the pressures on costs continuing. But I guess high level from a bank perspective, we issued our cautionary a couple of weeks ago on the move to Vic Falls Stock Exchange.
Yes.
Which I think is a tremendous move for the bank, and will provide value for all of our stakeholders, our shareholders and our staff. We also talk about the Kingdom Hotel. I know there's been a lot of discussion around the Kingdom Hotel, but we took that critical decision there to stop and look at the hotel, invest in the hotel, and set it up for the future.
Yes.
We've had a long-term partnership with Africa Sun, and they took a decision to exit. But that's all been handled very professionally, and then we still have very good relationships with them. But now is the time to look for the future, and we'll keep that hotel closed as shortly as possible, for as short a time as possible, and invest in that for the benefit of all the shareholders in that. Critical also will be deploying the funds from the EIB. And also our desire to bring on more lines of credit to increase our capacity to lend, and particularly to the productive sector, as we see the demand growing in that space. Consumer lending business is another business we've moved into, and that's important that we grow that. And then we talked about costs. You know, we have to continue to look at our cost base, look at the structure of the business. And this is the same across the economy. We have to make sure we're structured as efficiently as possible. And that might mean we have to take further decisions on how we're structured, where we go. And that structure could be lines of business we're in, it could be staffing structures, etc. And then there's increased banking presence. Do we look at our branch network? Where are we going? There's certain areas where we maybe want to invest more in, open new branches. And on our product and initiatives, as we look forward to that, we talked earlier about some of the products we launched last year and the channels we launched last year. We clearly have a new point of sale offering that's coming out, host to host, I talked about, and the integration of the general ledgers of the banks to our customers, onboarding of a wider range of MTAs, billers on our various platforms, online customer onboarding, and then clearly the growth in the US dollar business and the continuing growth in that. So we need to protect our balance sheet. We need to make sure that we deepen our relationships with customers and deepen our partnerships and continue to focus on solutions. We need to also increase the loans in foreign currency, and we need to make sure we invest in physical assets. But I guess before I wrap up, it would be remiss of us not to acknowledge the huge effort and partnership we've had from our staff.
Yes.
But it's also all the stakeholders. You know, we work very closely with our regulators, we work closely with our board, our customers, our clients, and our staff, and without those guys, none of this would have been possible. But particularly to our staff, and we touched on the growth in capital and the growth in business, and on the back of that there will be a dividend issued to all our shareholders, of which of course our staff own 15% of this bank. So benefit from the growth in the bank to the tune of the 15% dividend, which is a great benefit and recognition, I think, of the contribution our staff and our colleagues bring to us. So thank you very much to all of them. I think you've joined me in acknowledging the efforts and professionalism and diligence of all the staff and our shareholders. So thank you again for all the support we've had throughout 2022. And I think it's important to acknowledge, and we look forward to the support that we will continue to need and work together as we build on 2022 throughout 2023. So look forward to continuing to work with all our stakeholders and partners in 2023, and let's look forward to a very positive year. I think that's wraps it up from us.
Thank you very much. We hope to talk to you again after we publish our half-year results, which will be sometime in August, right?
August, I guess.
Yeah. Thank you.
Thank you.
Thank you.